Hello, welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. So, in the course of this presentation, I would like to continue with our analysis on companies in the banking sector of the Nigerian Stock Exchange. We've done Zenith Bank, we've done GT. We've equally, analyzed Stanbic IBTC as well as Sterling Bank. This time around, we want to concentrate on Fidelity Bank PLC. We want to carry out a fundamental analysis of Fidelity Bank PLC. So, in actual sense, we want to highlight the company's third quarter results because the fourth quarter full year result is not yet available. Hopefully by next month it should be ready. But for the meantime, let us make do with what is available now, and that is the company's third quarter results. As you could see on the table here, we have this particular column representing the third quarter 2025 results figures, and then the other column here represents the third quarter 2024 results. So let's start with the company's revenue. So the company actually had a revenue increase of about 44.4%. The company's revenue increased by 44.4% from 772.465 billion, 772.465 billion to 1.115 trillion, 1.115 trillion. And so we move down to the company's gross profit. The bank generated a 30.43% increase in gross profit from 422.239 billion, 422.239 billion to 550.698 billion, 550.698 billion naira is the gross profit figure. We also want to highlight the company's profit before tax. The profit before tax, as indicated here, unfortunately, there was a decline of 4.69%, a decline of 4.69% in the company's gross profit from 281.414 billion naira, 281.414 billion naira to 268.198 billion, 268.198 billion naira. That is the company's profit before tax figure. You also want to consider the profit after tax, the profit after normal expected taxation. The profit after tax, unfortunately, recorded a drop of 5.73%, 5.73% from 224.603 billion naira, 224.603 billion naira to 211.727 billion, 211.727 billion naira. Now, we also want to highlight the company's comprehensive income. For the comprehensive income, the company generated an increase of 21.04% in total comprehensive income from 276.230 billion to 218.121 billion to 218.121 billion naira. Now, we want to highlight this particular aspect of our analysis. That's the earnings per share. The earnings per share actually is the most significant, the most important figure in the entire table here, because this is what actually governs the level of dividend payout as well as the future growth of the stock we are considering. So in this case, the company generated, unfortunately, a decrease of about 5.59% in earnings per share, 5.59% in earnings per share, from 4 naira 47 kobo to 4 naira 22 kobo, from 4 naira 47 kobo to 4 naira 22 kobo. Now, for the company's share price, the current share price is 19 naira 95 kobo. 19 naira 95 kobo as against 10 naira in the year 2024. This represents an increase of 99.50%. 99.50%. So if we are to put this particular figure in perspective, it's telling us that assuming you invested, let's say, 10 million naira in this company in the year 2024, third quarter 2024, you will have your investment will have grown to 19.95 million naira, currently in the current year. That is what this particular figure is all about. You will have almost doubled your money. All right. That is what this place is talking about. Now we are through with this particular segment of the analysis. This segment represents what is called the profit and loss statements of the financial, the profit and loss section of the financial statement. A typical financial statement is very long. It's quite wide. It has many entries. So I try to summarize it into points that will make it quite understandable to my viewers. Now let's refer to the other segment of the analysis, which comprises of the cash flow statement as well as the company's balance sheets. So in this particular segment, this is a summarized version, a bare bone version, from a typical cash flow statement as well as the balance sheet. So the company share outstanding is 50.20 billion, 50.20 billion, and this particular bank, Fidelity Bank, has a market capitalization of 1.00 trillion naira, 1.00 trillion naira. Not only that, we move down to the balance sheet, represented here by the equity. The equity is something as the company shareholder value or shareholder fund. All right, so the shareholder fund here is 1.053 trillion naira. 1.053 trillion naira is the company shareholder fund, and the equity per share actually is a division. When you divide the equity by the shares outstanding, that will give you 20.97 naira, 20 naira 97 kobo. So this particular figure on its own may not be all that important. This represents the book value of the company, the book value. Generally, you compare what is here, this particular figure, by the company's share price. All right, and so the equity per share here is 20 naira 97 kobo, and the share price is 19 naira 95 kobo. You discover that the values here are somewhat close, all right, indicating that the company actually is cheap. All right, this bank is cheap. Generally, when you come across a case where a company share price is lower than the equity per share, that particular company is considered, to be relatively cheap. It's considered a value company. All right, you have growth company, you have value company. This is a typical value play, a value company. So the company's cash position here, that's cash at hand, cash in the bank, and a cash equivalent is 1.29 trillion, 1.29 trillion naira. The company has a robust cash position. It could take care of its cash, deployment need. It could, buy back shares as when necessary, without resorting to expensive borrowing from the bank. So here's the company's PE ratio. The PE ratio tells us how expensive the company is in relation to other companies in the same sector. So if you consider this, companies like GT have a PE ratio of about 3 point something, Zenith also 3 point something, okay. But this particular company, the PE ratio here is 4.73. It means that for every naira of earnings the company makes, you are buying that earning, that's naira of earnings for 4 naira 73 kobo. It's not very expensive. It's like going to a supermarket or a shop and an item worth 1 naira. Okay, you are buying it for 4 naira 73 kobo. That is the significance of this particular figure, the PE ratio. This company actually could be a candidate for your portfolio, but unfortunately, we could observe, a drop in the key parameters here, a drop in profit after tax, a drop in, profit after tax, and also a decline in, profit before tax. And not only that, there's also a decline in earnings per share. Generally, I want to see an increase in earnings per share. An increase tells you that the company is having, is profitable, has a better future, could experience, a drastic increase in share price. When you come across a decline like this in the earnings per share, you have to be cautious about investing in that company. It's a good company anyway, but you could patiently hold on and see whether there could be an improvement in the earnings per share in the subsequent quarter or quarters in the future. That's what I would talk about. I would talk about this particular company. Please, if you are a new investor or an existing investor and you want to optimize your portfolio, you want to obtain a better return, in your stock investments, you want to be able to optimize, your investment for a better results. Okay, you could contact me through this particular number. I'm always available to put you through, to help you to be able to do the right things that will make your portfolio more valuable. I discovered that most of my clients who come to me actually come with a portfolio that is not somewhat, what it ought to be. So when you come around, we'll be able to sit down together and see how we can work on your portfolio so as to be able to, have a better yield at the end of the year. So I'm available to issue this service, to offer this service to you. Please like this video and subscribe to this channel. If not done that, help me share the video as well, so as to be able to reach out to about at least 1 million Nigerians in and outside the country, to be able to improve, their investment capability, and be able to also make better returns from the Nigerian stock markets. Thank you very much for watching.